Hello traders, I welcome you once again to Leading Forex YouTube channel. I'm your admin Kofi, and today being another day and we all being alive, I want to talk about something very important in the forex market. So I will plead and beg of you to watch this video or tutorial to the end so that whatever I have for you, you are not going to miss anything out of it. Okay? So today, I want to talk about something very important that you have not heard in the forex market. Yes. And I repeat, I want to talk about something very important that you've not heard in the forex market. Oh, maybe let me not exaggerate. Maybe you've heard it, but have not really taken your time to know what exactly it is. Or you heard it, but didn't know the way to go by it, or to come forth with something that will be much better. This video is going to talk about that today. Let me not just keep you in suspense, but go straight forward to what I'm talking about. Today, I want us to talk about this word called expectancy. Expectancy. Okay? It is a word you might have not heard in the forex market, or even in the stock market or whatsoever market. Even if you have heard it, maybe you've not delved into it proper. You've not taken your time to know what this word really means. This is a very important word in the forex market. And so we are going to take this tutorial step by step so that by the time we end, you will properly understand what we mean by expectancy. Expectancy is self-explanatory, and so the meaning wouldn't be anything difficult. But what does this imply in the forex market? That is what I want us to talk about today. Now, before you started trading, okay? Before you started trading, you came across a strategy. And it was that strategy that helped you to trade. It was that strategy that helped you to buy or sell in the forex market. And so I would say your strategy can also be called your formula. I don't know whether I'm right with the spellings, but a formula. Your strategy can either be a formula or, better still, a system. Okay? A system. So you came across a system and then you decided to use that system to trade the forex market, to buy or sell currencies. So if you still do not understand what a strategy or a system is, let me break it down for you. Before you started trading, you decided to learn something we call price action. Okay? Price action. So you decided to rely on this formula or this strategy, price action. Price action is actually under technical analysis. Okay? Under technical analysis. So you decided to learn price action, the movement of price in the market. And then once you see price behaving a certain way, then you anticipate that the trade will either go A or B. That is price action. Yours is to look at the movement of price. And then when they behave in a certain way, you take action by either buying or selling. So this has become your formula. This has become your strategy. This has become your trading system. Again, maybe you decided to use what we call the Forex news. There are a whole lot of news that come on our way on daily basis in the forex market. So you decided to rely on the news because you have found a way to trade with the news whenever the news comes out, or whenever the news come out, let me put it that way, whenever the news come out, you are able to project how price is going to behave or react to the news. And so you have become comfortable trading with the news. This has become your strategy. This has become your formula. This has become your system. Can I move on? Or you have decided to learn what we call support and resistance. Okay? This is also under technical analysis. So you decided to learn what we call support and resistance. So you are using support and resistance levels to trade. This is also your strategy or your system or your formula. Or maybe you have decided to gather a set of indicators. And these indicators help you to either buy or sell. They give you what we call alert, or they give you what we call entry points, or they give you signal as to what to do, either to buy or to sell. So you have decided to rely on indicators, and indicators are also under technical analysis. So you have decided to rely on indicators to either buy or sell in the forex market. Is that okay? Let's move on. Or you might have decided, okay, you want to use what we call sentiment. I'm sure I'm really explaining things in a better way. And if that is true, I think this channel should be flooded with people. And you should be one of them by subscribing to this channel. Yes, and leave a comment under or below this video. If you think what I'm giving out to you is good, why not subscribe? Try and do that. Let's help the community to grow. Let's help the YouTube channel to grow. A colleague called me from one of the countries and was like, hey, I know you are in Africa. This channel is coming from Africa and it's Ghana specifically. I'm in Ghana. And he was like, look, maybe you are not getting a lot of subscribers on your channel because you are from Africa. But if you had come from maybe any of the countries, I wouldn't want to believe what he's saying is true though. But this was what he said. That I believe if you were coming from any other country, which is not Africa, maybe your channel would have been the first to appear on the YouTube search results or on their algorithm. Whenever people type anything about Forex, your channel should have come, or your channel should be the first to pop up because of the high quality content you produce. But I don't want to believe I am not able to get there because of my area. No, I don't want to believe that. But this was what he said. So together, you can help the channel to grow by subscribing and also hit the notification bell. And also, if you have people that you think they need to know about this channel, why not talk to them about it? Let's help grow this channel together. The content I'm giving are for free. So help someone to also get it. Okay? Let me continue. So maybe your strategy or formula or style of trading is by way of sentiment. And sentiment simply means that the position of traders in the forex market. So if you want to trade Euro USD, and then you realize that a lot of traders are positioned for Euro to go buy, and then a few traders are positioned for maybe USD to be weak or to sell, and then you will decide, okay, do you follow the majority or you follow the minority? A lot of people are predicting Euro USD will go buy, and a few people are projecting or predicting Euro USD will go sell. So yours is to decide where you want to go, whether you want to be among the majority or you want to be among the minority. So if you choose to buy Euro USD, then it means you are joining the majority. If you choose to sell Euro USD, it means you are joining the majority because you are looking at the sentiment. Let me come in percentage. Maybe 70% of traders are holding for a buy in Euro USD and 30% are holding for a sell. So do you join the 70% or you join the 30%? So once you decide, then it means you are trading based on what? Sentiment. So other people do that. They trade based on sentiment. And then we have people who also do a combination of one or two or three of these strategies. They combine two or three strategies to trade. So one can combine sentiment with price action. One can combine sentiment with the news. One can combine the news with any other strategy. There are lots of them. We have trend traders. We have people who trade using the trend. They want to find out the direction of the market. There are also people who trade using what we call the candlesticks pattern. They want to find out or read meaning into what candle has been formed. The formation of a candle, people believe, can project or tell you what to expect next in the forex market. So there are people who also trade based on candlesticks pattern and then the formation of candlesticks. The formula or the formation of them is able to project or to tell them how the market will behave. If they get a pin bar, if they get a hammer, if they get whatsoever, they have their terms, they have the names. They are able to tell based on the formation of those candles. And then people also trade based on the structure of the chart, the forex chart, the structure of it. It's so a lot of strategies, a lot. I don't know which one you use. And then maybe let's forget. Let me talk about this one too. There are also people who trade using signals. Okay, so it's also a strategy, okay? Yes. You feel like, okay, there are a lot of channels that are projecting or giving signals. So why not rely on them to trade? So you subscribe to some of these channels or some of these newsletters, and then once they give you a signal or they send you a newsletter, maybe on a currency pair, then you implement it or you execute it on your live account or your demo account, whatsoever account it is. That is also a strategy people are using. So people are also using signals or signal services as strategies, okay? So there are a lot of them. I am not here to talk about strategies, but I just want you to know about examples of these strategies that people use so that you will know which of the strategies you are using, because I don't know what strategy you are using. But once you chance upon a strategy, okay, the first thing you will do is to test that strategy. You need to test that strategy and see its efficacy, how efficient it is, the results it is able to produce. You need to test and find out. And then the outcome of you testing that strategy or that formula or whatsoever you may call it, whether a system or whatsoever, the outcome of it becomes what you are expecting, which is what I mean expectancy. Okay? The outcome of your system, what it produces, whatever your trading system is going to produce, whatever your trading strategy is going to produce, whatever your formula for trading is going to produce, becomes your expectancy. So that is what you will expect your system to produce for you if you choose to trade it or use it to trade. Okay, now let me break things down. So let's move on. Now that you know your trading strategy or your trading formula, the first thing you need to do in order to know the expectancy of your strategy is to test it. Don't forget, you need to test the strategy. You need to enter trades with the strategy. That is what I mean by testing it. You need to trade with it. And then the outcome of it or the results the system will produce will tell you whether to dump that strategy somewhere or to use it. Because once you are able to test it, it gives you confidence. It gives you a certain belief in the strategy. You know that, okay, if you trade this system, this is what you will get. This is what you will not get. This is the results it will produce in the long term. So you need to test it. There are people who do back testing, and back testing simply means trying to find out what was the result of your system in the previous years, and then maybe how many signals was it able to produce, how many trades was that system able to produce in a month, in 2 months, in a year, in a quarter of a year, in the middle of a year, in 2 years, in 3 years. How many trades did your system produce, and what was the outcome, what was the result? That is what we call back testing. But I am not talking about back testing here. I'm talking about forward testing. Forward testing. And what I mean by forward testing is trading your system in the current market. Trading your system in the current market. So I'm talking about the current market. So you need to trade your system in the current market. And the result you will get is what is mean by forward testing. So now, how do you get your system in place? Now, you know you want to use the news to trade, or you want to use indicators to trade, or you want to use price action to trade. To set up, to make your system complete and be able to analyze and know its expectancy, you need to know what is called entry. You need to know your entry. Take notes. I have told you what I'm teaching you might be a bit complicated. The technicalities are there. So I want you to also take notes on them. Follow me slowly. So you need entry. You need to know your TP. You need to know your stop loss. And then you need to know your risk. These 4 things are very important. You need to know your entry. You need to know your TP. You need to know your stop loss. You need to know your risk. Now, if I am going to use the Forex price to explain or to show you the example I want to show you, things might be very, very complicated and maybe you might not understand. Okay? And so in order not to make things very complicated, I would like to use the stock market price to explain, so that once you get the explanation in that better way, you can convert that idea into the Forex market. Please, do you get it? If I want to use the prices in the Forex market, things might be a bit complicated and maybe the understanding will be difficult. Maybe you will understand, but it might not be so easier if I'm using the it might not be so easier like if I'm using maybe the stock market price. So I want to use the stock market price, and once we are done, we convert that into the Forex market. Is that okay? Thank you. Now, these 4 things I just mentioned, you need to know your entry. Okay. So let's assume you have a demo account, or you have a live account of maybe $20 or $50 or $100 you want to use to try your system, to try your strategy, to see how it works. Okay. So, like I said, I am using the stock market. So you want to place your first trade with your system. Okay. So let's assume you are buying a stock with your system at a price of $50. That is your entry. So your E is $50. I repeat, you want to take your first trade with your system. And so you want to buy stock at a price of $50. That is your entry price. So you want to enter into that stock at a price of $50. That is your entry price. Now you ask yourself, what is going to be your stop? Your stop loss. Your stop loss is a point at which, if this $50 reduce up to, you will accept that and exit the Forex market or the stock market. So assuming you bought at a price of 50, and then you say that, okay, if the price reduces to a price of $45, I will close that trade. I will accept the loss I've gotten, and then save the rest of my money. So you entered at the price of 50, and then you said, okay, if this price reduces to 45, I'll leave the market. So your stop loss becomes at a price of 45. So if this is it, what is your risk? Your risk is just $5. So your risk, which is your R, is just $5. Do you get it? You entered at a price of 50, and you said if the price reduces up to 45, you close that trade. You can't afford to lose more than that. So your risk is just $5. Is that okay? And then you say that, okay, your TP, you are willing to exit the market when your price increase from 50 up to 60. Okay? So you entered at 50. You are willing to exit when it reaches 45. And then you are also willing to exit when the price increases up to 60. So we know your risk is $5. But your profit is going to be what? $10. Is that okay? 50 to 60 is $10. And then 50 to 45 is $5. So your risk is just $5, but your profit is twice your risk. Do you get the analogy? Your profit, which is $10, is twice of your risk. So your profit margin is going to be 2R. Take note. Your profit is going to be twice your risk. And that is the ratio I always talk about, 1:2. So when we say a ratio of 1:2, maybe 1:2, what we mean is just this example I have shown you. You are ready to risk $5, but we want to make a profit of what? $10. So your risk is $5. Your profit is 2 times your risk. So 2R. So your profit is 2R. So which is 2. So 1:2. That is the ratio I always talk about. Your profit is always twice your risk. So with the first example I gave, 50, a stop loss of 45, a TP of 60, and then at the end of the trade, lo and behold, your risk was just 5, and then the trade turned out to this end at this point. So you were able to win, and then you got $60 at the end of that trade. So your profit is going to be 2 times of your R, which is $10. Do you get it? So in this first trade, your profit is what? 2R. Take note of that. Is that okay? You were risking $5, and then you ended up making $10. That is your gain. So your gain is 2R, 2 times of your risk. Can I continue? Now let's take trade number 2. With trade number 2, you wanted to buy another stock at a price of $22. And then you said to yourself that, okay, if this trade, this is your your entry. And then you said, if this trade, your stop loss, if this trade reduces up to a price of $20, you will close the market. You will leave. And then also said, if this trade gets to a TP of what? 24 or 26. That would be 26. If the price gets to 26, you will take it as your TP. So your risk is just 2. Your risk is $2. And then your profit is going to be 2 times of your risk, right? But how did this trade end? The trade ended, okay? Let's see how this trade ended. You had this in plan, or you had this at the back of your mind that, okay, you are entering at 22. But if it should come down to 20, you will close and leave the market. But the trade came down to 20 and then you refused. You didn't close the trade when it got to 20. You were still in the market hoping that things will turn well. The price will move back up so that you make your profit. And before you could say jack, the price had reached 16. So at 16, you said enough is enough. You are ready to exit. And then you exited at the price of 16. Listen to the scenario very well. That was your second trade with your system. You entered at $22 and said if price should reduce to $20, you close and leave. But when price got to $20, you didn't close. You said, okay, why not wait small and see if price will turn back again in my favor? Sorry, I need to close this call because of the recording. So you didn't end it, okay? You didn't end it. And then before you could say jack, before you could think, the price had reached 16. So you decided to close it at $16, okay? You decided to accept the $15 loss. So if you ended the trade at 16, how much did you lose? You wanted to risk only $2 as your R. But before you realized you had reached 16, so what is your loss now? Your loss is now $6. You wanted to risk only $2, but you ended up risking $6. Is that okay? You wanted to risk $2, you ended up risking $6. So what is your R? So it means you lost 3 times of your risk. $6 is 3 times of your risk. So you ended up losing 3 times of your risk. Do you get the analogy? So let's take note of that. So our second trade, we had 3R as what? Loss. The first trade, we had 2R as profit. Don't forget, our first trade, we had 2R as our profit. Our second trade, we had 3R as our loss. We had 3 times loss of our risk. And then the first trade, we gained twice the risk. We lost thrice the risk. So that is our second trade. Let's move to our third trade. You decided to put a third trade with your system. So at this point, let's come with different figures. You entered at the price of $100 and said to yourself that if price reaches $80, you will exit that trade. So what is your risk? Your risk is going to be $20. Then, lo and behold, before you could say jack, this trade had given you $300. So what is your profit? From $100, it increased up to $300. So your profit is $200. Is that it? So you wanted to risk only $20. Then you ended up making $200. So that is 10 times of your risk. Is that okay? 10 of these $20 will give you $200. So you risked $20 and then you made 10 times of your risk, which is $200 over here. So you closed at a price of $300. You entered at $100. You ended up getting a profit of $300. So you have made $200 as profit, which is 10 times your risk, because you were only willing to risk up to $80 when the trade should come down to $80. So your risk is just $20. But the gods of trading has been on your side and you ended up making 10 times your risk. Is that okay? Let's continue. Okay. Let me pick my fourth trade and then end here because a lot of messages and calls are coming through. I need to attend to a few people. Let's take our fourth trade. So our first trade, we had 2R gain. Our second trade, we had 3 times 3R loss. Our third trade, we had 10R gain. Or should we use W as win? Win. The calls are beginning to come. Anyway, so let's use the fourth trade and see how it goes. I'm just showing you how to set up a trade and how to make things clear. Okay, let's go on with our fourth trade. Now, with our fourth trade, you decided to enter at a price of 79. And you said that if the price should reduce up to 70, you will close. So your risk is just going to be 9. Your R is going to be 9. Is that not it? And lo and behold, the TP, the trade actually got to 70. And then you closed it. So it means you only had 1 R loss. So you just lost your risk, which is just 1. You didn't go beyond that. And you didn't go below that. You decided to just take your 1 R loss. So let's assume your fourth trade, you had 1 R loss. Is that not it? Now let's do the calculation quickly. Your first trade, you had what? 2R win. Your second trade, you had 3R loss. Your fourth trade, sorry, your third trade, sorry for the calls coming through. It's actually being recorded, so I can't stop this. All right, so our third trade, we had 10R win, and then our fourth trade, we had just 1R loss. So let's calculate. This is what our system has given us, okay? This is what our system has given us. Now, out of this, let's look at the number of wins that we had. So 10R plus 2R will give you, we are looking at this 2. So these 2, the wins will give you what? 12R. And then the losses, which is this and this, will also give us 4R. So we had 12R wins and then 4R losses. Okay? The R stands for your risk. So your risk, you had 12 times gain on your risk. And here you lost only 4 times of your risk. You gained 12 times of your risk. You lost 4 times of your risk. Get it too clear. You made 12 times of your risk as profit. And then you lost only 4 times of your risk. So if we should do the subtraction, what are we going to get? We are going to get 8R as gains. So at the end of the 4 trades, we made 8 times of our risk as profit. With just 4 trades, we made 8 times of our risk as profit. Here we had 12 times of our risk as profit. Here we made 4 times of our risk as lost. And so when we take the loss from the profit, we're going to get 12 times of our risk as profit. This is the results of 4 trades. The results of what? 4 trades. Now, what is your expectancy? Okay. We need to look at the mean. We need to look at the mean. Okay. We need to look at the mean, or on average, what this system is giving us on average. Sorry, I need to cut all these calls. I'll call them back. On average, what is our profit or loss on average? We already know we had 8R as wins or gains. So on average, remember, we took 4 trades. It was 4 trades that gave us 8R wins on average. So we're going to divide 8R from 4 trades. So out of our 4 trades, we managed to make 8 times of our risk as wins. So on average, what is the expectancy of this trading strategy on average? Or when it comes to the mean of this trading strategy? 4 into 8 will give us 2. So we have 2R. 4 divided by 8 will give us 2. So 2R. So on average, our trading system is able to make 2R. On average. So on average, our trading system is able to make 2R as profit. So if we are trading this on average with just 4 trades, on average, your trading system is going to give you 2 times of your risk as profit. Which means this trading system is not a bad one. It's not a bad one at all. It's not a bad one at all. Not bad. If the trading system or strategy you are using can give you 2 times of your risk as profit on average, then it means you are on course. Your trading system is a profitable one. But even let me explain this or come with this. You realize that during our second trade, we wanted to exit at a price of, we bought at 22 and wanted to exit at 20 and then ended up exiting at 16. Which means that we didn't follow the rules over here. You told yourself that you exit at 20. When it starts going against you and it reaches $20, you will close. But you refused to do that. Instead, you ended up closing at the price of 16. So you didn't apply what we call discipline over here on your second trade. You didn't apply discipline. If you had applied discipline here, you would have just lost just 1R. But because you didn't apply discipline, you ended up losing 3 times of your risk. You had wanted to risk only $2, but you ended up risking 3 times of it. You lost $6, which is 3 times your risk. So here you didn't apply discipline. So it was after this trade that you learned your lesson and then decided to apply strict principles on your 4th trade, where you planned 79 and then to exit at 70. You plan at exiting at 70, and truly when it got to 70, you exited. So it means here you actually applied discipline. But the second trade, you didn't apply discipline. If you had applied discipline, it means that you wouldn't have lost that much. That is why we always say that in forex trading, discipline is very important. You will certainly lose some trades. Trading is not 100%. You are not going to have a 100% win. You will surely have some losses. So if you cannot discipline yourself and stick to some rules that you will set for yourself, these are some of the things that will happen. So with this strategy, you know the expectancy. But should that be the way to go? No. If you really want to try your strategy and be sure before you start applying it or using it with your live account, you need to trade at least between 100 to 200 trades. At least between 100 to 200 trades should be enough to tell you the expectancy of your strategy. It is not just about 5 or 10 trades or 20 trades. No. You need to demonstrate or test your system, your trading strategy, with at least between 100 to 200 trades. That should be your assignment. All those that will want to test their system, at least demonstrate between 100 to 200 trades. and then calculate your expectancy. Okay? And then on average, tell us whether your trade is going to end up in negative or in positive. Then you can use that as a yardstick to enter into the Forex with your real or life account. Look, this is just for free. I'm giving you. If you really want me to walk you through this one-on-one or help you one-on-one, okay, the cost is very simple. It's just $100. You pay $100. I'll take my time to take you through this one by one, step by step. If you want to learn Forex trading the right way, if you want to be able to do things the right way, and then I know you must be willing. The first thing you need is willingness. You need to have that passion for it. That, okay, I want to really learn Forex. And if you have that passion for it, and maybe with what I have explained, you still haven't gotten the details, or you still don't understand, or you still find one or two challenges somewhere, and you really need me to coach you and mentor you and walk you through things step by step, the cost to do that is just $100. And I'll walk you through from A to Z. I'll teach you all you need to know practically, not just theory. Because when you watch my channel, you realize that things I'm doing with you are all practical. They are not just theory. So if you want that one-on-one session with me, all you need to do is you reach me, you make payments of $100, I'll take you through. Look, Forex trading is a whole profession on its own. If you can spend years in school just to become a professional in a certain field, then don't just think you can just come on the internet and read one or two articles, or come on YouTube and watch one or two videos and become the master of all. No, you really need to take your time and learn. So take your time and learn. Get the right thing that you need, the right information that you need before you move in to start wasting your money in the market. You need the right steps that will guide you to become a professional. And people charge $1,000 to give tutorials, or to just go for 1 or 2 day seminar. People pay as much as $1,000, $2,000 just to attend seminars, which is Forex trading seminars. And these seminars only last for 2 or 3 days. Just 2 or 3 days, they are done. Look, those 2 or 3 days seminars and paying that huge amount of money will not be enough. They are just going to throw the theory at you, and then you think you have it. I have been trading for 4 years. 4 years. So I'm ready to share that experience with you. That is why I'm doing it here for free. I'm just giving that to you. If you understand what I have given you, then start practicing that with your system. Try practicing that with your system. But if you want me to help you, I'm ready to help you for just a fee of $100. If you are ready for that, then this is how to get in touch with me. I give you my email. You can reach me through my email, or at the description of this video, just the description of this video. At the description of this video, you see the link to my Telegram page. Join my Telegram page, and then on my Telegram page, you will get the link to chat with me one-on-one, okay? And then we can go forward or move forward from there. So you can join my Telegram page and then reach out to me one-on-one, or you can also send me an email and then I'll respond at gmail.com. So this is my email. You send me an email. Let me write it again. Okay. Those who want to reach me by mail, You can reach me by mail at gmail.com. legankofi@gmail.com. legankofi@gmail.com. You reach me, we will talk, and then we can begin. If you want that one-on-one coaching, we can do that. All right? Thank you for your time, and please subscribe to this channel for more videos coming your way, more tutorials coming your way. You need them. Stay with me, and you will never regret having me with you. Thank you. I'll see you with another tutorial, with another video. And please, I'm sorry for the incoming calls. Please forgive me. And those of you I have ended your calls to, I'm going to call you back. Sorry, I had to do that.